Gold prices seem to be stemming their two-day slide. David, is the sell-off that we've seen done for now?
Well, we may get a little bit further pullback, Alex. I had done a report over the weekend looking for 1708 to be specific as one pullback area. We basically hit 1709 this morning on spot pricing. The other area could be a little deeper, would be in the mid 1690s, but we remain bullish. This is a normal pullback after a strong rally, and I see gold recovering from here for sure.
1709 was actually a level I got from another technical analyst yesterday. At what level, though, do you turn bearish?
It would have to materially fall below 1680, and at this stage, I don't expect to see that. I expect to see us no lower than the mid 1690s, and then I think we will be rallying back towards new rally highs from the 1520 low. So we're looking for, after this pullback, to head back up towards the 1800 area.
And what kind of rally is that going to be? Do you think it's going to be slow and steady with some little corrections along the way? Or are we going to have some kind of catalyst that really pushes prices up fast?
Well, obviously, there's still a lot of unknowns over in Europe and Greece, and I think that will be a partial catalyst to kick more money into gold. So that's partially why I think this is just a normal pullback. You know, we went from 1520s to 1760s. That's $240 an ounce. Subscribers of mine know, and gold investors should be aware that a pullback is pretty healthy here. This is a new bull trend. So we're looking for, 12 to 18 months out into the $2,300 an ounce range, conservatively. So pullbacks are normal and they're buying opportunities.
And then, so how does, though, gold shake out in relation to Europe like you brought up? Are you expecting a safe haven bid at some point, or are you expecting continued tracking of the euro, which hasn't been very helpful for gold recently?
Yeah, it's pretty much just an alternative investment. I think what's happened over the last several years is more and more investors are aware that gold is a viable investment in their portfolio, and as more and more people begin to put gold into their portfolio, 5 or 10% of their portfolio, you're just seeing more and more demand.
But by that logic relating to asset managers diversifying into gold, shouldn't we see a euro-gold inverse correlation instead as we continue to see those countries struggle with their debt?
Well, you would think so. The question, though, again, Alex, is gold now viewed as a risk aversion asset to other currencies? In other words, you buy gold to offset currency risk, or is it becoming a legitimate long-term investment vehicle for investors? And I think it's starting to lead towards the latter now.
All right, thanks, David. I really appreciate it. But in the short term, you can expect some kind of big bounce in gold, and so a pullback might be a good time to buy.